In this video, I'm putting 3 of the top UK providers that offer a managed stocks and shares solution up against each other to see who is really doing the best with your investments. But before I introduce the challengers, I want you to know that I will also be throwing in a 4th contender just to see how these well-known providers stack up against something a little more humble. More on that in just a minute. So we all know that investing for the long term is a good idea, right? We also know it can be a total minefield when it comes to choosing the right investments for your circumstances, what you earn, what you want to risk, your ethics. All these things might be factors in how you want to invest. So enter the managed stocks and shares portfolio. The idea is that the big financial providers will ask you a few questions about what your goals are, how much risk you want to take to get there, how long you want to invest, and so on and so on, and they will make some investments on your behalf based on these answers that you give. It sounds pretty good. For a bit of a fee, your manager will take away all the pain of looking after your investment portfolio and let you get on with life while your money works away in the background until you're ready to cash in. Of course, no form of investing is risk-free. When you invest, your capital is at risk. Now, I'm not a professional. None of this is investment advice. It's just for information and entertainment. Also, this video contains financial promotions. There are links in the description, and if you sign up and use these services, I will get a little bit of kickback off that as well. Right. Let's meet the platforms contending for your cash and let's find out which one is going to make you the most money. First up is Money Farm. Money Farm is a big hitter in the managed portfolio space, so this one had to be included in the competition to find the best managed stocks and shares portfolio. So I haven't previously used this platform, so I'm excited to sign up and look around to see what sort of products they offer, what costs there are, and what returns I might expect over the next 12 months or so. I've heard lots of good things about the overall user experience, so I'm looking forward to putting that to the test too. But just before we introduce the next contender, I want to tell you about the rules of this competition. When I'm comparing the performance of different providers, I have to get some kind of baseline to make sure I'm not comparing apples to oranges. So for example, if investing conservatively with one provider in safer assets isn't really the same thing as buying high risk assets with another, or very niched down subsets of stocks or something like that, it's important to stress that I want to compare the platform's performance rather than the performance of different kinds of investments, and for that I do need something of a fair baseline. So number 1, I'm going to give each platform £500 starting money. To this I will add 50 quid a month and see how this drip feed goes. Number 2, the competition will see all the contenders funded on the same day, and as far as possible, the top-ups will also be carried out at the same time too. After that, it's really down to the platform as to how and when they deploy that cash. Number 3, any sign-up bonuses there might be, fees to be paid, all that will be taken into account. Gains are gains and losses are losses after all. I don't really care where the gains and losses come from. As much as this is an examination of a platform's performance in investing, it's all about how much money can be made at the end of the day. Or lost, of course, because no investment like this is guaranteed, as I say. So rule number 4, as much as I can, I'll be looking for a product that maximises my capital in stocks and shares. Stocks are certainly a long-term kind of investment, but can also be the most volatile, and I think this is the one that's going to give us the biggest chance to see the biggest difference in performance, and so will hopefully be the most interesting to watch. But there is another reason why I'm interested in a stocks managed portfolio, and that's going to become clear after I've introduced our next 2 platforms. So contender number 2 is Invest Engine. Could Invest Engine offer the best managed stocks and shares ISA? Now, I've been a fan of Invest Engine since they came to my attention in about the summer of 2021, and I myself managed ISA has been with them for a couple of years now. However, dabbling with their managed service has left me with a few doubts about how good that is. However, I'm going to reboot my investment with them as part of this challenge, partly because I know the product and I'd like a little bit of familiarity here, but also because it's another fast moving app that's improving all the time. Our last managed offering will come from Nutmeg. It's another new one from me, but a long-standing player in this space and hugely popular. I wonder just how good their product is when compared with the other 2 in this list, but I guess that's what we're going to find out. So recently they were taken over by JP Morgan, so there's plenty of experience behind this platform, and I wonder will this help tip the scales in their favour. So I alluded to the fact earlier that I'm going to choose stocks and shares. I'm going to lean as heavily on this as possible because I want to look carefully at this idea of managed funds. It's an oft recycled message in the world of investing that active fund managers cannot beat the general market over the long term. Take this example from justetf.com. You can pause the video and read it yourself, but let's just highlight the last paragraph here. 83% of fund managers failed to beat the European equity benchmark. 94 failed to beat emerging markets, 95 failed to beat the US equity benchmark, and 96 failed to beat the global equity benchmark. And so the fourth and final contender in this challenge is just going to be a straightforward S&P 500 tracker, and I'm going to buy this fund on the growing Lightyear platform. I have other videos on Lightyear on this channel, so I'll not labour the features today, but in choosing this platform to buy VUSA, which is the S&P 500 index tracker offered by Vanguard, I'm going to use this to act as a baseline to compare the performance of these managed funds. By the way, let me know in the comments which one you think is going to perform best, or if you think I've missed a trick and should have included other platforms, let me know which you would suggest. So Lightyear is free to deposit by bank transfer, doesn't charge any execution fees to buy ETFs on their platform. ETFs themselves, of course, have a charge, but those fees will apply no matter where you buy your ETFs. This low fee approach from Lightyear is going to help me keep the costs down as low as possible to give me this really good baseline for the rest of the managed funds. There's a lot of good reasons to choose VUSA as your benchmark for this challenge, but Warren Buffett once said that the best advice he could offer retail investors was just to invest in the S&P 500.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund.
So it seems a pretty good place to start when you're trying to find a simple product to go up against the managed funds. VUSA costs 0.07% to hold, and this cost will be taken into account when you buy and sell this asset, so it isn't anything you have to factor into your own calculations when you're looking at profits or losses. The figure you see in Lightyear is the final profit and loss that you have to put up with. At 0.07%, it is extremely cheap to invest in compared to other indices. Lightyear offers a clear and easy way to track your investments through their app and their website. They offer a lot more, of course, than just ETFs, including the options to buy shares in individual global stocks. They offer a multi-currency account and pay good rates of interest in uninvested cash. I have links below in the description if you want to give them the whirl, and just for transparency, if you sign up using the links below, you can get yourself a $10 bonus when you invest just £1. Hi folks, Future David here. Apologies, you actually need to deposit £20 to get your $10 bonus. The terms have changed. It's not £1 for your $10 bonus, it's £20. Let's get back to the video. And I will also get a reward as an affiliate commission for sending you their way. Just remember, when you invest, your capital is at risk. Using Lightyear and their fee-free way to invest in VUSA in this case is going to let me see just how these managed options offered up by the big boys shape up against a low-cost, simple option of investing in a simple index tracker. It's going to let us see if paying these extra fees for a managed account is really any better than going for one of the simplest do-it-yourself options you could imagine instead. So let's get signed up and get some deposits in. That was a whirlwind. So we're all set up with these three managed accounts versus VUSA on Lightyear. Lightyear don't offer fractional shares on ETFs, so we had about £30 left over from our starting balance of £500. So I decided to park the remaining £30 in a money market fund until the next deposit goes in and I have enough to buy another share of the VUSA ETF. Specifically, I chose the BlackRock ICS Sterling Liquidity Fund. I have another video on the channel that explains all about money market funds and what they can do for you. I'll link that below so you can check that out when you're finished here. Money market funds suit well for this challenge because they let me park some money that I'm not quite ready to invest yet into VUSA. Hopefully while it sits there I'll be able to make just a little bit of money instead of holding it in something like an instant access account with my bank. This way I'm able to have every penny working for me in this simple strategy of VUSA and a money market fund. just like how all the managed funds will be putting my money to work in their own products.
2 weeks later.
So here we are up and running. Here is an early comparison as to what we are invested in and the start each product is off to as well. Alright, first up, let's check out Invest Engine. So this is my ISA provider, as I said before, but we're scrolling down, we're going to the Invest Engine provider challenge, and we can see that we are 4.05% behind. It's not a great start. It's been a bit rocky in the markets in the past couple of weeks, so I would have expected to see these values down. Interesting that the first one we open is Invest Engine and we're 4% behind. Alright, let's move on to the next one. Nutmeg doing a little bit worse. We are minus 4.37% here. Again, with the stocks and shares markets on a little bit of rocky ground at the moment, I would have expected all these values to be behind at this stage. But remember, we are comparing the platforms against the relative market. We are not necessarily looking at performance today. Cool. Money Farm, our third contender. Well, relatively speaking, it's not doing too bad. It's minus 3.77%. £481 of our starting 500 remains here. Very soon we're going to have the next £50 batches going in, so that's interesting. Only less than 4% behind on this particular one. Finally, let's get a quick look at Lightyear on their website. Interesting looking at Lightyear here. We've got 7 shares of Vanguard S&P 500 and we are only 3% behind on this one. And of course we have topped up with the BlackRock ICS Sterling Liquidity Fund. It's currently showing 0 profit. Now, as I understand, this pays out monthly, and if we have a little closer look at this, we do have 10p's worth, 10p of unpaid interest, so that one is at least taken over. Interesting that the straight up simple index here is outperforming the managed funds at this point, but it's very early days. We haven't really invested that much money, and we certainly haven't seen any sort of month on month activity just yet, but that's a pretty early look at what was going on here. And while I invested in all 4 of these platforms at the same time, it took different amounts of time to actually have my money invested in different products. Comparing the performance could be a regular feature on this channel, I'd say every month or so. So if you're interested in watching how this goes with real money in a real world scenario, putting these providers through the ringer, then make sure to like this video, comment below that you're interested in following along, and make sure you subscribe so you don't miss any updates. If you have any questions on what you've seen today, please let me know in the comments and I will see you in the next one.